Welcome back once again to today's tutorial. And remember, I told you last time, this is how I told you how to identify key levels. Okay, so I spotted the move by the market and I decided to make this video just to show you how to identify this key level. Okay, so yeah, let me quickly delete this. It's not needed. Yeah, this is not needed for now. Okay, so yeah, so I'm gonna go this way so that you'll be able to see a bigger picture of the market. This is crash 1000 on 1 hour time frame. Okay, on 1 hour time frame. Now remember I said when you meet market just this way. Okay, now you want to quickly look at the left. Okay, you look at the market from the left and then see what the market have been doing. Now you zoom out completely this way and you pick the swing, the low point and the high point of the market where you have just met it. Okay, and then you begin to place your horizontal line just to identify the key points. Okay, identify the key points. I hope this is taken. Okay, you choose your, first and foremost, you choose your time frame. Okay, and then identify trend and price movement. Okay, by looking at the high points and then the low points of the market. Okay, and like I said, you do that by zooming out completely and then you acknowledge what I just said. Okay, you acknowledge the following again also: what's been happening in the market over a specified period of time and what just happened. Okay, now if you look at the market here, what just happened? Okay, the market just crashed from here to this point. Okay, yes, that's what just happened. Okay, and the market is currently at this point. Now we want to, there are many confirmations here from what I've seen so far. Okay, that has made this market highly probable. Okay, is of high probability trade. So what I will do now is I'm just gonna place trade, like, and then we'll continue. Okay, I'm placing just a single buy. Okay, yeah, just a single buy. Yes, something just happened now, that's why I placed. I'll show you in the course of the video. Okay, so by then, having done that, we are going to go ahead to identify the key zones now. Okay, that is point of possible reversals. Okay, there are many ways to do this, but we're just taking this for now. Okay, we want to pick our horizontal line, then we'll start from the top. Okay, start from the top, place it here, then we'll pick our key point, our key areas just this way. Then place another one here. Okay, and then let's back test to see what happened at these areas. Okay, started from this. Okay, have you seen this place? Have you seen? Okay, have you seen how the market reacted around these areas? Okay, all right, so let's go back a bit to see if it's relevant. Okay, yes, the two lines I placed are relevant. Okay, if you look at this place, okay, so let's go back and then pick more. Okay, now we can put more here. We can take this, then we also take this, and then we take the current one, that is the position of the market right now. Is it really relevant? Yeah, let's check, see what happened. The market, remember that support and resistance are not lines like this, they are zones. So these are zones. Look at the whole of this place, they are zones. Look at the market reaction around that place. And remember that the fractals helps you to pick the swings. So wherever you see these fractals introduced, it automatically helps you to pick the swings of the market around that area. Okay, just look at it very well. Now we can decide, okay, we have the trend, the vertical, the horizontal line I earlier placed, okay, the small one here, so let it be, and then let's make do with that. Okay, let's make do with that. Now, having done this, you want to these are areas of support and resistance, and of course there can also be point of reversals or areas of struggles. Okay, the market struggle around that area. If you look very well, okay, if you backtest, you see the struggle of the market around those areas, choosing, you know, okay, the market struggled, you know, look at it here, just as you can see. Okay, so that's that. All right, guys, so let's continue. Then what you want to do next, okay, we have used our horizontal line to pick these places. The next thing we want to do, remember that the best way to know if these places you've picked are valid is to backtest. Okay, to know how the market actually behaved around where it made touches on those horizontal lines we've placed. Okay, now you want to further break down the chart even more to understand what the market is doing. Okay, you want to further break down the charts even more to understand what the market is doing, to have a clearer picture and organized way. Okay, for the most current move of the market. So how do we go about doing that? We can bring in our trend lines. Okay, and bring in our trend line. You identify even smaller key zones. Okay, now we can do that by bringing in our trend line. Okay, now if you look, there's a move of the market, though this one is gonna be a larger something. Can you see something that I'm doing, guys? Okay, let's take it this way. Okay, are you seeing anything? Are you seeing what is happening around that area? If I had made this market area, I would have put the trade alien off. Okay, now let's extend the trend line. I'm going to show you something that will be, oh my god, I don't know how to say it. Now, have you seen anything? Now we can decide to bring in another trend line and then join from here. Are you seeing something, guys? Are you seeing something? Are you seeing something? Are you seeing what is happening? Are you seeing what is happening around here now? Okay, this is what we call confluence. I'm still going to show you another secret that is there, hidden one. Now, what do you do again? Now, you want to put your rectangle at that point. Is there anything you are seeing around that area, guys? Is there anything you are seeing around that area? This is market, pure market analysis and chart reading. That you break it down, you know, the easiest way. Break it down the easiest way. Oh, sorry about that. Okay, we want to extend it. Please, I beg your pardon. Yeah, want to extend it. Now I'm using smartphone. Want to extend it to this point. Okay, yeah, let it be. Okay, let's do it this way. Yeah, let's leave it this way. Now, aside all this, there is what we call psychological level. All these things, remember we met the market here. Remember, this is where we met the market. Okay, we're assuming we met the market, though we met it here and have executed trade already. This trade is running. Now, assuming we met the market, yes, this place that we met it is a perfect place. Now, look at what is happening here. Now, I'm going to show you something there now that is so amazing. Now, if you look, there's what we call psychological level. Okay, we're going to talk more about that maybe very much later. But it's a level that determines price. Okay, it affects price because of the reactions, okay, of traders around that area. Right. Psychological level is just a level on the chart that is most times whole numbers. Okay, and people tend to remember numbers that are whole, things that are very easy. So most traders react somehow around that area to either place a trade and then or to stay away from trade, because they're either expecting the market to react in a certain way around that area. Now, if you look at this place now, that this whole thing is happening, is coming together, you see that it is 8900. This is a very round number and a very significant number. So when the price was getting to this place, okay, you know that it's most likely going to reverse. Okay, now first and foremost, all these things combined is what we call confluence. Now you look at this trend line coming here, and then this one coming here, and then you look at our rectangle, okay, that we place, and then you look at our horizontal line, everything coming to touch here, okay, and then you don't just, this is a high level confluence, but even at that, you don't just place the trade immediately. You look out for a bullish candlestick to that will signify that price is moving and reversing around that area. Okay, now you see a very strong bullish engulfing candle. This is a very strong bullish engulfing candle. Okay, the candlestick after the red bearish candle, signifying a very sharp reversal at that point. Okay, all right guys, so this is a high probability trade. So where are you going to place your stop loss? You're going to place your stop loss just beneath this place. Okay, beneath this place, and then this trade can go up to this very point. So this is one of the ways, and a very important, in fact this is one of the most profitable because of the confluence. Okay, confluence is a point in a chart, market chart, where there are many indicators pointing to the same fact, pointing to the same thing. Okay, either the price will reverse or price will continue. Now we see that here is how many confirmation do we have here? The trend lines coming to meet here, the psychological level, our rectangle, then the horizontal line, everything meeting at this point. Okay, so this is high level, high probability trade, guys. So this is very, very important for you to note. Okay, with this kind of market, you are good to go, and to go a very long way. So your long is gonna be long indeed. Okay, so we are just going to go ahead to place our stop loss. Okay, we're going to place our stop loss somewhere here. Okay, we're going to place our stop loss somewhere here. Okay, yeah, below these two swing lows. Okay, below these two low points. Yeah, so Okay, let me show you. Let me just put my horizontal line where I'm going to place the stop loss. Okay, the stop loss should be somewhere here. Okay, then let me pick it as crash 1000. You just go and copy the point, okay, and then you go back and go to the trade. Look at how far we've gone, guys. Go to the trade this way. Okay, you edit, you paste it, then you click modify. So we've placed our stop loss around here. Now the market may actually spike when it gets to this place, somewhere around here, because of this place that will place our horizontal line, which is a significant level, a key level. So it may spike, but then it will still go up. Even if it doesn't go up, we can decide to take our profit before the market gets there. Remember that one candlestick is 1 hour. Okay, so this is high probability trade. Look at the confluence somewhere here. Okay, so that's just it, guys. And there are other entry and exit techniques. Now there's another thing I did not show you. Now if you look very well, you discover that there are price rejections around that area also, signified by our fractals being introduced. Okay, our fractals introduced here. Look at this weak rejection before this bullish engulfing. Okay, candlestick pattern. Okay, so there are up to 5 or 6 confirmations that price will push up from that area. So this is how I take my entries. Some of my entries is just one of the ways and one of the best. Okay, this one now is multiple confirmation. That's why it's a confluence entry point. Okay, so where are you going to TP? That's another thing. Now it's most likely this market will get to at least this point, at least this place. Okay, now let me clear this and okay, now it's most likely this market will get to at least this point, but let's check higher time frame and see what is happening there, so that we'll know. Okay, if we check our 4 hours time frame, you discover what is happening in the market, or what may likely happen in the long run. Now even our confluence is noticeable here. Okay, now let's go landscape. Yeah, this is actually a new move by the market, okay, because the market was actually right inside this channel until it broke it, got to this significant level, this key level, and then it crashed. So he's making a new move now. So this is most likely going to be the trend line that will be respected in the long run. So I'm looking at it that something else, this thing will come here. Okay, are you seeing it? Now let me show you what I mean. Now if you look very well, you can also see something like this. Okay, so it's most likely this market is pushing up and may likely come this way and still go up. Now it may not go straight way like this, but then that's what I'm looking at. Okay, so let's get back to our 1 hour time frame. Now you can actually set your TP, your first TP, maybe somewhere around here, but if it's about this level, it's going to break it. Okay, but then you can always take partial profits, or if it breaks here, you can, because there must be a pullback somewhere around here, but it's going to break it. No, then when it breaks here, you can either enter another trade, or you lock up the one you have entered, or you take your partial profit and then allow the remaining profit to be running, okay, to this point. Now, if you don't want to close the trade, you can always use stop loss to lock your profit, which I've shown you guys many times, okay. So in my videos that are public on YouTube, okay. So that's it, right? Yeah, your TP can be here. You can TP even before this place by taking partial profit, okay. Then the next one could be before this highest point that it has reached, okay, for like days now before it crashed. So that's how to take your TP, to set your TP, guys. So many thanks for watching, and I believe you're gonna practice this. Remember that your ability to spot the move of the market early enough helps you to take advantage of the market. Now, if I had discovered this market early enough, I mean, it's very, very early now, but if I had discovered this before this point, I would have entered the trade somewhere around here. That is what we call sniper entry. Though that's risky, but with the confirmation, you see what later happened. I would have taken the risk, and by now I would have been in the market for like an hour plus now, okay. But it's still okay, and that's how we roll. That's how we do it, guys. Forex can be so easy when you know what's happening, especially boom and crash. So that's it. If you are new, please subscribe to my mentorship class, and then you can invite your friends, invite your brothers, invite fellow traders. Let's show them how to milk the market. And this is an exclusive content. I'm not supposed to, it's not for everybody, okay. So just note that. But then you are such a lucky person to have come in contact with this. So practice it. Always strain your eyes to notice and to identify what the market is doing and take advantage of it, and you are good to go. So many thanks for watching this video, and please, I'll talk to you in my next video. Okay, before I say goodbye, I forgot to add something, and this is just it. Now, if you look, you discover that this market is also, aside all this that I showed you, is also in a channel, okay, in a channel. I didn't add the second one, okay. But then if you look very well, you see that this market is actually in a channel, okay. You can either put this trend line somewhere here, okay. Are you seeing that? Are you seeing that? Yeah, this market is in a channel, okay. Now if you look very well, you'll see these are the trend lines, this and this, okay. From here, see, there are obvious touches here, and then this, okay, this. So it has made two touches to the downside, so it's most likely this market to go up, not exactly straight this way, but you know, it may do like this, but it will come down to retest the trend line somewhere there, okay. So that's just it. So I have many extremely high probability trade. Now you see we're in profit already, so this market is going our way. So this is pretty how much we analyze the market, and then we are good to go, guys. So I want to say final bye for now, okay. Bye bye.